So all sectors are up in the Russell 3000, but there's one sector that's down this year. That would be utility stocks, which are down 1.55%. But technology, materials, consumer discretionary stocks are leading the way. Randy, let's take a look at a chart showing these sectors on the Russell 3000.
Right.
Like most analysts, you say that a pullback makes sense in the market right now. What do you think this chart is going to look like, say, a month from now, or perhaps when a pullback happens?
Right. Well, if a pullback occurs, it'll probably lead to a leveling out of the playing field a little bit. Last year was very much a risk-off year, a lot of volatility, so people were hiding out in the utility space, they were hiding out in telecoms, they were hiding out in consumer staples, kind of stuff you buy in the grocery store. And then as soon as the calendar changed, it flipped over and rotated. And so, if we did get a pullback, you would see a little bit of a rotation back in that same direction that we had last year, where utilities and telecoms would do really well for a period of, a few weeks, maybe a month. That would tend to even out the playing field a little bit as we go through the year.
And Randy, you're fairly bullish on the market. You say that equities will rise by double digits this year, and you're optimistic about what's happening in Europe as well. You say that financials will do well and perhaps will help technology stocks. Can you explain that?
Yeah, if you think about what's happened in the past, the technology companies, the Ciscos and Microsofts and all these technology, Oracle, they've sold a lot of their products historically into the financial space. So if the financials are struggling, which they have been for the past 4 or 5 years, then the techs are going to struggle a little bit. They have other markets they can sell into, but financials is a big market for them. So now if financials start to come back even a little bit, you're going to see the technology companies are going to be able to re-enter that marketplace and sell, and their earnings and their sales are going to go up quite a bit.
We've also heard some buzz that earnings guidance perhaps is not as satisfactory as previous quarters. What do you make of that?
Right. Yeah, it wasn't as good. I think a lot of it had to do with maybe a recession in Europe. What I've seen from companies that are reporting earnings is that the slowdown may not be as much as people had anticipated it to be. But companies like 3M that got hit pre-earnings with the slowdown theory, now all of a sudden, after earnings, like, wow, it wasn't as bad as we thought, and the stock starts to come back. So it's not as bad as people thought.
Great. So we're looking for some pullback in the market, perhaps taking some gains in technology and material stocks, but in the long run, seeing double-digit growth on the S&P 500.